everybody. My name is Jess Gaffney, and I am the CEO and Executive Director of Beam, a nonprofit in town that advances women entrepreneurs. I'm thrilled to be here with you today, along with my amazing panelists for the Kendra Scott Women's Entrepreneurial Leadership Institute International Women's Day celebration. Our panel topic is Real Talk, What You Should Know Before You Raise Capital. And I'm thrilled to have three wonderful and perfect panelists for this topic. I have Adriana Cantu, the founder of Revealix, Chrissy Cowdery, founder of Stagger, and Jan Ryan, founder of Beam, our nonprofit, formerly Women at Austin, serial entrepreneur, and also executive director of entrepreneurship and innovation. So I know many of you probably know her already. Adriana and Chrissy have both just received funding from Beam's Angel Network, and I'm so proud to have them here giving their perspective. It's such a thrill for me during this time to be able to help them with their fundraising journeys. For today's panel, we're going to cover three basic questions. Where does funding come from and what options are out there? What should you think about when choosing which funding option to pursue? And what are some insider tips for women founders who have raised capital? Because the reality is we know it is tough for women to raise capital. And according to, even a recent study, the women founders share of venture capital funding actually shrank to 2.2% in 2020. So we need to figure this out. I would say that the more educated we can be and the more we know about what options are out there, the better chances that we have. Also, on a good note, I did read an article the other day that did say Black and women founders have landed 30% of the largest US early stage rounds in 2021. So we are looking up for this year, and hopefully we'll continue on that path. Why don't we have each of you introduce yourself and then share a little bit about what capital options you considered for your company and why. Chrissy, do you want to start?
Sure. Yeah. Thanks for having me. My name is Chrissy Cowdery, founder of Stagger, CEO. And when I started fundraising a year ago, so early 2020, right in the middle of the pandemic happening. Fortunately, I was surrounded by some other kind of female founders who kind of helped me, guide me along the process. To be honest, my mom was my very first investor. And so, you hear the friend, you hear and she was mandatory that she be the very first investor inside of Stagger. So, there's the friends and family around that you may hear and that term kind of coined. And so I really started to capitalize on that. And I went after some very high net worth individuals that I knew in my network. So past CEOs that I've worked with, other kind of tech entrepreneurs. When you're really early in the process, where you're literally kind of pitching just a pitch deck and maybe some designs and a clickable prototype, it's good to have some people that you've maybe worked with in the past who know your work ethic, who know that you can deliver on what you say and follow through on your word. So I started to go the friends and family route first and foremost. And my very first check was from my very first female CEO and my very first college job. And so that was 15 years ago. And she is a high net worth individual. I have followed her in her career. She was the very first kind of female CEO I saw in action as a very young kind of worker in the industry back then. Her feedback to me was, Chrissy, I know your work ethic. I know that you can build something good. And she wrote me a check for $50K. And so that was really what kind of got me started. To be quite honest, about 58% of my cap table currently are from angel investors that came out of cold reaches on Twitter. And and it's really interesting to kind of tell my story around how Twitter has been a really big tool for me. There's the investment and kind of startup community on Twitter is it's tremendous. And the support out there is a hidden gem, if I could say so. So I have only raised from angels. I recently just got my first VC fund that came into the round. And this is after a year of building and having a product, having customers. I wasn't able to see that kind of VC interest until I had a product and some more traction. For me, my advice, if you're building kind of a tech product, something web-based, it's easier to get the VC funds to engage when you have traction. And so for me, the angels proved to be really successful for me. Again, these are high net worth individuals, people who will make kind of a bet on the jockey and not the horse at that point. they proved to be kind of my early believers, and that I've been able to be successful in kind of raising that route.
That is awesome, Chrissy. So I'm Adriana Cantun. I'm the founder and CEO at Revealix. So we're a digital health company that's helping people with diabetes to avoid preventable wounds and amputations. So being in the medtech space, and that's my background, my domain expertise is in this area. And the way that my co-founder and I strategically thought about it, it's a pretty high bar to actually get to a position of strength when you're coming into, med tech and med device. So we were in a position to self-fund the initial launch of our company, and had really been very intentional about where we thought we needed to be to get to a milestone or two that would actually give us a better positioning for pulling in outside capital. And I know that is not an option for many early founders. So I think the lesson is to really just be very thoughtful about what is that one milestone or two that you can reach through your own time, on your own dime, pulling in the right, friends that have talent, surround yourself with all the capabilities in the world to reach that milestone. So you do want to think about what is the milestone that is going to be give you strength to get accepted into an accelerator program that might now give you that next infusion of cash or resources. What is that milestone that you can reach that the angels in your community, individual angels, might be able to respond to and give you that first 25, that first 10. How far you can go with 1,000 versus 10,000 versus 100 times that is really profound when you're an early founder. So I want you to really just think about those milestones. So that was a very big part of our start, was the intentionality around that. And again, we were in a position, being a little bit older, to actually self-fund some of that. So that was a decision that we made, and it worked well. Our first outside capital came after we had developed our prototype, done a lot of R&D on our own, and then had the ability to pull in outside capital from an individual angel. And she today is now one of my very closest friends. The early angels are people who back you early on. They get you, they know you, they believe in you, and they get your business. They believe in your business. She has deep domain expertise in the payer world to actually see that this is a problem that needed to be solved, and believe that we were attacking it in a way that could get us to the promised land. So it's that type of angel that I think you want to really be on the hunt for, whether that's someone in your immediate community or one degree of separation from that. I think, as Chrissy said, finding people who are very knowledgeable about your space that can make bets based on their firsthand understanding of the market. Even better is when they get to know you and can also feel like, and I want to back that jockey. I've had the same thing said to me, Chrissy, which is, what do you bet on, the jockey or the horse? It's like, I'll bet on the jockey. And I felt like, well, we've got the jockey and the horse. Let's go. So I think that's really something you want to think about. Be very strategic and then tactical about how you're going to get yourself into position for that first milestone to then pull in the next opportunity that you have for your company.
I love that. Thank you. Jan.
Yeah, thank you. This is awesome to be a part of this great group. I was mentioned earlier with Jess. I'm actually a serial entrepreneur, if you can use that word. I've been an entrepreneur for 17 years before I came to UT back in 2017. And I went through in my career about 5 rounds, raised about $22 million. When I look back at, interact with so many young entrepreneurs now, I really understand a little bit about what goes on in the mind at the very beginning. I actually teach a class in women in entrepreneurship, and it's really not about the competence, as I can see. It's more about the confidence and the way you think about money, and the fear that, oh, maybe I could never raise money, or it's something beyond what I could do. This is just a matter of, like we're learning right now, what is it about, and how do I build my network so I can meet more people? First, wanted to just say, I applaud you for those of you that are out there right now in the UT system wanting to test their ideas, and you're curious about this. You will be so grateful. You have a leg up on your peers if you do try some of this, especially while you're in school, while there's a safe place to fail, whether or not your company is successful, you will have had some real world experience that puts you way ahead of everyone else that would take them 3 or 4 promotions inside their career to get to. So I just want to encourage you to keep going in this. But as an entrepreneur, all my companies, my career was in the tech space. Anytime I was looking at funding, I knew I was going to have to eventually go big inside of what we were doing. So I was going to have to go to venture capital. So all of mine came from angels and venture capital. I will say early on, I had a company, Social Dynamics, this last one, that we were helping big brands talk to their customers through social channels. And only about 3% in 2008 of mentions of a brand in a social channel of any kind were ever answered. Completely different world. Now it's flipped, almost all of your questions might be answered through a social channel. I knew I was going to go venture, and it was just too early to go to venture. So I started going back and really working with those that were potentially mentors inside of the venture capital world. So for instance, my angel funding from Social Dynamics came from an angel, if you will, but he was actually a member of NEA, which is a large venture capital firm in Silicon Valley. He was writing his own check, but I was developing him through some relationships I had before, because I thought ultimately that NEA would be someone that would be great for us. So there were those types of angels. We did self-fund at the very beginning with a little cash. It wasn't a huge amount, but I think friends and family are always very important very early on. I'm just encouraged to know that there's so much uptick in women being able to get in front of the right people and being able to know, what they really need and want, and getting more information as early as, in their college years.
Jan, you bring up such a good point about mindset and confidence. It's one of Beam's main pillars, because it's just so key and important to start young, to be developing that mindset that you can achieve these things. You're more than able to do it, and it takes practice and trying it. All of you really touched on going down the VC angel journey. And I want to just take a step back and ask if you can offer some advice onto how to determine which is your best journey. Like, why did you choose the VC angel network route, and what other options are out there?
Along the lines of what Jan was saying, we've always intended to be seeking VC investment, that would be the appropriate match for the type of company we want to build, which is a large, fast growth company. And that very significant amount of capital would allow us to accelerate, what it is that we've started. But to be in position to that, you have to do a lot of things, and then to be able to think about the capital that helps you position yourself along the way towards being ready for VC. So what that means is to start looking at all the different options that don't compromise your ability to really then be ready for VC. In our case, individual angels, high net worth individuals and or angel groups were the most likely path, and that's what's been working for us, is individual investment, being another group investment. But the other 2 options to mention are accelerator programs. Revealix was accepted into the Techstars program through United Healthcare's, their initial launch of a healthcare venture firm. So for us, we were able to get a significant amount of capital through them. The other opportunities that maybe aren't considered are pitch opportunities to win awards, to win grants. And we also received a good amount of external capital that helped us along the way by winning pitch competitions, by getting those prizes at the end. So I think that that's something to think about. Depending on when they happen in your life cycle, they really do make a huge difference to help you kind of bridge from one position of your company to being able to now take on the next growth opportunity. Even though being in medtech, we did not pursue any longer term grants. And that's still something that, if any of you are thinking about medtech, I think would be good to do your research now. It's very time intensive, so it never made sense for us. It's something I still have on the table, but those would be the most likely, matches for the company that we're building.
Thank you. And I just wanted to mention a couple other accelerators that we have in town. Adriana obviously mentioned Techstars, which is fantastic. And there's also Capital Factory and SKU and Sputnik Clinic and Div Inc., which specifically focuses on women and people of color. Checking those out is a great option for not only raising some capital at the beginning, but also just helping grow your business and how to think about it. Awesome. Jan, what about you?
As I mentioned before, really think that my business model required venture capital. The business model is something you want to think about before anything, and your determination of this. For instance, I in tech knew I was going to go venture eventually, and as Adriana said, I needed to do the things that required to eventually get that kind of investment. But if I was coming out with CPG product, I probably would want to look at SKU, and I might even do something with crowdfunding early on to market the product. Crowdfunding is a very popular thing for women. The studies show that women are actually more successful and raise more in crowdfunding. So that's becoming more and more something that a lot of young entrepreneurs want to look at. You do have to really think about in crowdfunding what it is you're doing way before you just start the campaign. So I won't go deeply in that, but crowdfunding is something that is some work also to make it successful. But if I were doing a services company, I might look at grants, and many students can look at grants. If you were very early and you really didn't even know what you wanted to do, I would definitely on the campus look at Genesis, which is a non-dilutive fund, essentially small grants to give to students. You might look at the accelerator called Cell if you have an impact-based company, but really surround yourself with an ecosystem that eventually can take you to funding. And funding is just a word for working capital, guys. This is not a fancy word. It literally is just money to continue what you're doing. You're going to probably bootstrap at the very beginning, but you need a little bit of money to keep going. And maybe Uncle Bob is not going to give you another $20,000 after he doesn't know what happened to the last $20,000. You want to find yourself in an ecosystem. So that's what I would say is really start to work within a group of people and mentors and people that will introduce you to mentors. And this just works. This is not brain science. It just works, but you have to put the time in to go do it.
Yeah, I mean, I'll echo a lot of what Jan said, specifically because Jan and I play in the same space, right? So Stagger is a visual storytelling tool for brands to do storytelling all over the web. And so you can imagine that we're starting to kind of follow in the footsteps of what Jan built in 2008. So eventually we require kind of the VC funding. And a lot of what you're saying, Jan, in terms of finding your network and surrounding yourself with people who can help make those introductions is really key for us. And depending on your mental model around loans and credit, and I'm like deeply allergic and afraid of debt. And so it wasn't an option for me to go to a bank, pull out a really big loan if I didn't know that I could pay that back. And so that wasn't, and that can work for some other people too, if they feel like, this is something that they can pay back really quickly and won't be drowning in debt. And, that was something that I wanted to make sure that as, starting Stagger and starting to build a business, we weren't drowning and I wasn't emptying out my 401ks. And I just didn't want to kind of feel that I wanted to hustle, but I didn't want to hustle in that way. Again, angels and the people who are in my community works really, really well. Bootstrapping was kind of an option for me, just kind of based on some past investments and freelancing. But along with investors come the expertise that they have that you don't have in a specific area. So I am very strategic about the angels who are on our cap table and providing assistance and guidance and things that I have no idea how to even tackle. To me, that's just another value add to have people behind you that can provide not only capital, but advice as well.
Yeah, that is great. Totally agree on that. Let's talk about tips. So now that, let's say you have taken the time, you're growing your network, you're thinking through your business model and what option to pursue. And let's say you decide to pursue the journey that you have all chosen, which is, the angel investor VC round. What are your two best tips for how to prepare to raise successfully? Chrissy.
Oh man, your deck and your story have to be nailed. And this was from some advice, female founder here in Austin that really helped me. And I was very adverse to kind of pitching in front of her because she had raised millions already. And I was really scared to like do this in front of her. But as soon as I did, and I got the story right, and she helped me with the story, and I practiced it in the mirror over and over and over again, so where I could just do it in my sleep, I was able to kind of close that first check. Having your story down in the most digestible way to where you're not rambling, you're able to really tell them, you know, what you're building, why you're building it, the problem that you're solving, and why now, and what that capital can really help you do. I think the storytelling part is like the most important part to start practicing before you start asking people for a check.
Really good advice. And one thing also that I've heard a lot too is you don't have to have all the answers because you're so early.
No.
So it's not about getting every detail correct or whatever you want to call it. It's about being able to express what you are working on and what your challenges are and being honest about those too. Did you find that as well?
Yeah, being vulnerable and saying, that's a great question. I don't have the answer for you, but I will find that out for you. And I found that every time I didn't have an answer, I would go and make sure that that was an ancillary slide in my deck to make sure that, okay, if that question came up once, it's probably going to come up again. Let's research it. Let's have an answer for it. So either every no or question that I got, it helped me refine my story. It helped me be more prepared. And so being able to say, I don't know, is very, very powerful. It doesn't show weakness. It just shows that you're coachable and that you're willing to, you know, keep looking and keep going.
Yeah, I've heard that a lot from our angel investors, sophisticated investors who, when they're talking to you, they're not really looking for you to have all the solutions. You know, they're looking to see how you respond to things. Like you said, if you're coachable and if you're willing, if you follow up on something you say.
I was going to say, and actually get some oxygen on your deal. In other words, getting people to look at it. It's so important what Chrissy's talking about, just getting people to look at it before you're ready. So many times in the last several years, found women who are, you know, in a silo, getting the fonts exactly right, afraid to show it to someone when it's the opposite that's needed. Get it out there and help, you know, have them give you some feedback. And you may get multiple feedback that doesn't even agree with each other. It's okay. That's your job as the entrepreneur to try to figure out what is the right way to go. But one thing I would say as a tip is to be sure you're clear about the ask. Make sure that you, even before you're ready to know exactly what you want with funding, you've got to be able to know how to ask and be clear about it. So often women, we get together and we start talking about our passion and whatever, and it's almost like a visit. And it's the opposite of what you should be doing if you're trying to look for ways to go forward. Always take the ball forward after every call. If you do know what you want with funding, you need to be clear about how much you need. What are you going to do with that money? I think as women, sometimes for some reason, we're afraid to talk about money, and we wait till the very end of a time. Like if you have, let's say 35, 40 minutes with someone, you're going to ask at the very end what you actually need. And it should be at the beginning. You should actually come in and talk to them about what you're going to talk to them about, even if it means asking them, what is it that you think I need? Here's my issue. Here's all the things that I'm, struggling with. Tell me some advice about how much do you think I should raise now? These are very important things to be clear about. Don't wait till you need funding. Develop the network, think about funding, write the numbers, keep your spreadsheets, figure out what you're going to need. Not at the very end. It's a common mistake that women make. Sometimes even before you're fundable, you need to be very specific. If you want mentors to be able to help you, if you want introductions to people, again, back to that ask, be very, very specific about what you need.
Jan, that's such a good point. And I read a while ago something that's really stayed with me, that the average investor knows the person they invest in for 12 to 18 months before they invest in them. Jan's exactly right. Building that network beforehand. And geez, how lucky are these students that they get this advice now? Like, imagine I started doing this 20 years ago. I mean,
yeah.
Wow. No, that's amazing. All these, it's really something to be listening to Chrissy and Jan and talk through all difficulties, having lived through all of that, we're saving you years, guys. So I think that's important, but it's true. I mean, one thing was really, really neat, Chrissy, when you're talking about it, and your energy comes right out when you're talking about the pitch process. And I think that's really something, is that energy and excitement that you have of why you started the company, that always has to come out. And so just make sure that you really are selling that part of the vision, because it may not be that you have all your ducks in a row yet, but you are describing that vision. What I have done, was build a huge ecosystem and a network over, many, months and years that have been there for me when the company was in a better position to actually start to get that outside capital. So I think that the relationships that you form, the intentionality around building your ecosystem is so important. One way or another, this is how you will grow as an individual. This is how you will grow as a professional. This is how your company may or may not grow, but these people are really going to be valuable. So the two tips that I have are maybe more, once you've built your ecosystem and once you've got your pitch nailed and you're ready to go and ready to run out there, stop and do two things. One is, it's all process now. So get your pipeline of investors, your target investors set, build your target investors. And just as you've identified who your target customer is, you've got a persona, you know exactly what they look like, what they sound like, why they want what you're offering. There's going to investors who also fit your company to a T. So divide these target customers into thirds. The first thirds are the ones that you think are ready to put money into your company right where you are, and they could be your first check or two or three. Then you've got your middle third, which are, they like it, they're not likely, so maybe they're not your innovators, your early adopters. They're going to say, we will back you, but who else is in? And once they see you've got other checks, they say, great, we can commit, X to your raise. And then that last third is investors who may not be the first or second, but they're going to say, once you've got 70% of your raise committed, and say, okay, we can help you finish that off. So just think about who those individuals are, where they fit within that continuum, and then use that network that you built to help you reach those target investors. The tip two is then about the fact that you've got like a pop-up sale for investing in your company. Get those investors in the door and have all your paperwork ready. Get a data room set. Have your pitch and material and collateral materials ready to go. So when somebody asks for some ancillary slide, you can be ready to fulfill that and not be slowed down within the time window that you've allotted to raise. And that you're able to take that investors all the way through term sheet to close to getting money in the bank. So that's the second process, which is to see it all the way through.
If I may add one more, if they throw a no at you for the first time, it's not a no forever. And this is experience of just pitching someone that I pitched exactly a year ago who was a no. It was too early. He wanted to see more. I again kind of built the product, had traction, went back to them last week, pitched it, and they were a yes on the call. So don't take the no as your no forever. Keep going back and listen. Make notes inside of that pipeline that you're talking about. I was too early. They want to see X. And so you can go back through your pipeline and say, okay, I've met X. Let's go back and have that conversation. And that keeps the ecosystem and the follow-up up to date. And you can keep building that surrounding support system.
Follow up with them and let them know when you make different steps and things happen. I think that's one of the most important things that we could give as advice, is to make sure that you develop your ecosystem by actually communicating with these people. Pitch to them, and you're right, Chrissy, most of them are no's at the beginning, and then come back to them and let them know the progress you're making. Adriana, that you're one of the best at being able to do that. You've built an ecosystem here in an exemplary way, and you would get back and let people know what was going on and what was happening. I know we're going to draw to a close here, but one thing I want to say is, if anyone is wanting to practice this, you should absolutely sign up for our fall pitch competition. The KS Well Institute is going to be sponsoring a pitch competition in the fall, and it would be crazy not to be a part of that. So I just want to encourage you to be a part of that. Also, there was, back to Christy's point about pitching, that this whole pitch is extremely important when you're raising funds. We had another session on that earlier today. If you missed that session on pitching, you should go back on demand and view that session as well, because these go together. Pitching and funding they're dependent on each other.
Absolutely. And while we're talking about resources, Beam, the nonprofit, has a member collective that I want to make sure you all know about. It's a great way to help build that network we're talking about. And we also have what we call fundraising essentials modules that help you practice that pitching and investor engagement, where we do mock investor meetings. Like Chrissy said, it is priceless to be able to practice with investors and get that feedback. That's how you really learn. The theme of today's International Women's Day is choose to challenge, which I just think is really perfect for this. Like, choose to challenge the status quo of women not being able to fundraise at the same rate that men are, and really being able to change that. I'm really inspired by all three of you, because you are certainly leading the way in that. So thank you. Everybody out there, we know you can do this. Keep going, keep practicing, build that network. Have a great rest of the day.